let's take you to the time machine and take you to 2047, the Amrut Kal of ours. All of us are looking forward to it. What are you looking in 2047? What is the Nifty looking at? What is the Indian economy looking at? How does the India is looking at 2047?
I think that the Amrit Kal is a beautiful term which has been coined. But essentially, this is a phase of great economic accelerated growth.
Hello everyone, welcome to Kotak Konversations, the platform where we discuss the latest trends, challenges, issues, regulations that affect the world of business. We call the sharpest minds on the street and ask them pick their brains for the latest happenings and try to decode them. Friends, FY24, the calendar FY24 has been very interesting. At the start of the year, you have the stock indices reaching the peak, but while the year ended around last 2 quarters, there was a definite slowdown. The quarter 2 of financial year, fiscal year FY25 was one of the slowest in latest times. And also the corporate results that are coming in are not really something that one is cheerful about. The question that everybody's mind is whether this is something which is a temporary blip in the great India story or it is something structurally changing. On the other side, there are so many geopolitical changes as well, the most significant being the change in the US leadership. We all know Donald Trump has some thoughts about the international tariffs, and that's going to affect many countries, including India. The interest rate cycle actually across the world has definitely changed the trajectory. And therefore, we thought this particular time is the right thing to talk about navigating Indian markets and the global headwinds. Today, we have the two Indian experts to talk about this. Atul Suri, the CEO of Marathon Trends, and Rajesh Bhatia, the MD and CIO of ITI Mutual Funds. Great to have you guys.
Thanks, Sachin, for having us. Thank you.
Rajesh, mutual fund industry is something that last 6-8 years, nothing short of calling it a meteoric rise. And the retail participation, the tier 3, tier 4 cities participation, the AUM upwards of 6 lakh crores are all the things are really to be proud of. Now, but how long this will continue? Couple of things. Number one, the retail investors are not seeing the downturn at all. That's number one. Number two, finally, there is a limit to how much the investors will participate. Finally, you're not talking about 140 crores Indians participating. There is a limited set of investors who actually go to the equity. So are the SIPs and mutual fund investment are plateauing on?
No, far from it. I think if you look at the long-term picture, the financialization of savings for the Indian population is a long-term thing. And why the Indian public has taken to mutual funds, as you point out, is really the experience. It's the actual experience of what real returns they've been able to achieve with the mutual funds over a long period of time. So it's the results that have happened which have convinced the Indian populace that this is a very good asset class to be in. So if there is some analogy that in the United States, 1982 to 2000, there was a very large shift of financial savings towards equity. Some people would say that the Indian analogy should be similar. It should be similar that there is a financialization of savings and there should be a continuous flow to the mutual fund industry. Look, India has been a fantastic market, probably next to or even better than the United States. Over 43 years, we have generated 15% per annum. Now, there is, I can't think of any other market which has so consistently delivered equity returns, right, of this kind for such a long period and with such consistency. Look, the return on equity of Indian corporates is anywhere between 15 to 18%. Longer term equity returns are decided by the business profits, and the ROE is a very good guide as to what that is going to hold for the future as well. So I'm actually in the camp that believes that financialization of savings is a long-term trend. The mutual fund or the SIP route to entering equity markets has been a fantastic strategy, a winning strategy for investors. So the evidence, because it is so positive, that's why I think it's getting reinforced, as a trend in the long term.
I would just like to add, and I totally agree with him, that as I said, Sachin, I don't know about the next 3 months, 6 months. We are not talking about that. But this is a very big runway. And you have to go back in history and see what happened in the US between 1980 and 2000. It was phenomenal. So we did some work, and one very good way of understanding the retail participation is to look at something called the AUM to GDP ratio. So today the AUM to GDP for India is 17%, 1-7, right? The global average is 63%.
Oh.
Do you understand what that means? So when you're talking about the size of opportunity, there are two aspects to it. One is the GDP itself growing bigger, because obviously we are talking about India being one of the fastest and one of the biggest GDP growth we are going to see in the next few decades. And second is that share moving from 17 to, let's say, even if you move to a global average, even if you discount it, that itself. So to put it in simplicity, it's the cake is going to get bigger and the slice is also going to get bigger. So you can imagine so much more cake is there to eat.
Yeah.
So this is a factor. This is a two-way thing.
Oh, extremely encouraging to listen to both of you. And now, one question I'm going to ask both of you: whenever there is a bullish run, and both of you in the long term are bullish, there are always some breakout themes. You know what? Some years back there was a private banks, and there was a e-commerce. There are always some breakout themes that define the market, and every point of time they are different. So, Atul, if I ask you, and maybe followed by Rajesh, what are the breakout themes or something new that will come up that the investors should focus on going forward?
It's a very, very relevant question, because one is where the index is going, but second is what are the themes to participate in. And the fact is that, when having spent 30 years in the market, I find that these themes actually rotate. It's nothing, we always thought, you should invest in X kind of stocks, high quality stocks, pain stocks, and it will do well for life. But you'll realize that you lose many years in between, and which are very, very painful. These are no-brainers. But you'll realize as investors, you lose a lot of time. So one thing I've begun to realize over years is that no theme is perpetual. Markets have a way of cyclicality, and as fund managers, I guess to some extent that's our job, to be able to realize what the themes are playing out. So if I take it in the short run, okay, I'll answer it on two frames. I find that one sector that seems to be emerging, which was average performer, is IT. I find that tech is, some of the way the tech company results are coming out, a couple of them came out. I find that in the short to medium term, I feel tech can be a very, very interesting area to participate in. Banks is a consensus bullishness, but interestingly, I feel that the heavy lifting or heavy loading by the market will be done by tech. And I understand that even in a difficult market, I find some tech stocks making new lifetime highs. In weak markets, what is showing strength? And I think tech is one area that stands out, and it's a very important sector because it's the second highest weightage after banking. I find that is one theme that really plays out. But if you ask me for a longer time frame, I still feel that India is all about building infrastructure, about industrialization, manufacturing, and that's clarity. You can see the push the government is making. There's absolute clarity about this. So I feel that things related to capital goods, engineering, infra, they are going through a difficult time. The last 3 to 6 months have been challenging for it. But I do think that these are going to be the big mega trends that are going to play out. If you're talking about decade, because without that, this country cannot achieve what it is setting out to achieve.
So I agree with Atul on the IT team. I think that is definitely a theme that I would like as well. But apart from IT, I would say that digital commerce is really something that is exciting me. See, we have, as a country, built a fantastic public digital infrastructure. And on the back of that, you are getting to have commercial digital infrastructure. So whether it is food delivery platform, whether it is quick commerce, whether it is insurance aggregation, or whether it's payment platform. Now, what I like about the businesses, these are non-linear businesses. They are leveraging the mobile telephony penetration of 1 billion people, right? All of those become your customers, and on a non-linear basis, right? And basically, they have created unit economics and value for the individual customer. And because of that model, which is non-linear and achievement of very high growth rates, I think that is a very good space that I'm very excited about.
Yeah, fair. Guys, one of the things that happened in last year, since you are talking about FY24, we saw substantial increase in the derivative volumes. Yeah. Then subsequently the retail participation, the HFTs coming in, then regulator getting a little worried, having some regulations around the curbing the volumes to some extent, and we have seen the fall in volume in the month of December, and something more can come in January. Now, you run a very successful long-short fund. How does a long-short fund, or basically how does it get affected by such drop in the volume? Does the impact cost increases, the NAVs therefore get impacted, or how does the market will get affected because of the drop in the volumes? Because that's what it looks like.
So the drop in volumes is actually more in the options market. I think not as much on the futures market, and rightly so. So to answer your question directly, then the drop is more in the options market where the long-short funds don't necessarily have to participate. The futures market, in fact, has expanded. The number of companies has expanded. Now there are, I think, 223 odd companies which are in the futures market, which is about roughly 75% of India's market cap. So that's a fairly good canvas which is there in the derivative market, in the futures market for long-short players to kind of participate. Is this a good thing that there are curves that are coming in by the regulator? I think it may not be a bad thing. Where I think, look, markets are all about greed and fear, right? So the fact that we feel that retail participation is unnecessarily taking risk, etc., that's very, very likely to happen in a market which is done as well as we have. So greed is definitely going to kind of take over. In the United States today, which is a developed market, which has evolved for over 125 years, still some of these pump and dump, etc., and all of those things kind of happen. So I think the market maturity will kind of evolve, but I think the human emotions of greed and fear will remain. So this regulatory framework of trying to curb, etc., may work for some time, but I think those animal instincts will come back in some other form.
Is the flow moving to non-regulated markets and something like that? What the fear that you would have that will go to?
Honestly, I don't have any data on the unregulated markets. What point I'm making is that people who are, that you will not be able to curb the greed element in the market.
Okay.
Those kind of risk or taking abilities will remain. It has remained in the United States after 125 years of evolution, and it will probably continue to remain even in the market.
Okay. Atul, I want to touch base on the other phenomena that happened in FY24 calendar. Well, I want to touch base on the SME IPO frenzy. I think the numbers like 2,000 times subscription. There are two ways to look at it as I see it. One is, of course, the SMEs as a borrower. Both banks and NBFCs are liking it, and we are seeing it a good growth in that sector. Is the equity investors are also looking at SMEs from that perspective? Are the hidden jewels in the next 5-10 years are in the SME space? Is that something, one way to look at it? Other way to look at it is there is some lot of fraud and something wrong happening there. Which club you are in?
I believe in the latter part, the frothy bit. You look at those companies, you look at valuations, and you look at stock price movements. And as I said, you've seen cycles, and you realize that it's a perfect recipe for a lot of people getting hurt in that space. So let me give you an example. I was in Surat, and Surat is a great market because the investors, the HNIs there are fairly evolved. They're very smart, and greed drives them a lot. So I asked them, you want to interact? First, I asked them that how many of you invest in SMEs? And 60% of them had their hands up. And then I, sort of spoke to them and I asked them about the returns they made. I mean, the kind of returns that they made was that there's no reason for them to ever invest with any fund manager. The kind of returns were breathtaking. And then when you realize that, these things are not sustainable. My second question was very similar to what Rajesh. I asked how many of you trade options? 80% put their hands up. Right? And I asked them next, how many of you make money? All 80% put their hands up. And compared to the data that SEBI gives you, that number of people who make money on options, there's definitely a conflict. So I think they misunderstood me. They thought that how many expect to make money than actually make money. The thing about options is, everyone expects to have that big paycheck. So similarly also is this whole SME sector. I think when you look at the fundamentals, you look at valuations, you look at the price behavior, you realize that actually it's a perfect cocktail for a lot of retail investors getting hurt.
So I agree with Atul. And there's one more element that I want to bring to this picture where you talked about the kind of issues that have taken place.
Yeah.
From multinationals, Hyundai, LG, Timken, all selling their stakes. Indian promoters have sold stakes. Private equity firms have sold stakes. There's a lot of QIP. IPO. The last number I read for financial year 25, amount of issuance is going to be 7,50,000 crores. And that's a phenomenal number if you think about it. But the other way to look at it is without that kind of issuance, our markets would have gone berserk. With the inflow that is coming into the market, right from the demand side of equity, if you did not have this supply, your price earnings ratios would have gone even crazier. So it's not a bad thing to have this kind of issuances. It has kept our markets a little more rational.
Fair point. Important point to make. Correct. Atul, now this was FY24. Now let's look forward. Now, tell me from the PM, you run a very exciting PMS. Now, tell me it's a long only PMS. But shouldn't the PMS investors look at the broader asset classes because we are restricted largely to equity? There are so many things. There are the stress assets. There are the REIT funds. There are unlisted equities. Shouldn't be the PMS be allowed to invest in all these different kind of asset classes? Is that where are you on that?
Yeah, I think so. It makes sense because there are multiple choices now. You have mutual funds, of course, AIFs actually. A lot of them are being allowed to do all that, and now you have this new category of this 10 lakh kind of play that's coming up. So I feel PMSs are getting a little squeezed in between because they essentially are long only. They can't do much shorting either. There are a lot of restrictions to it. So PMS, I feel, are getting a little boxed in because you've got people at your heels and you've got people at your heads. So you actually have to protect your body. So for a PMS manager, to survive or to be relevant, you have to come out with outsized long only returns. Essentially, you have to beat the mutual funds by miles. And if you look at post-tax, it's not a very easy area. So for me, yes, I can also question that this asset class, just restricted between these four walls, may find it challenging. That is why you'll find a lot of PMS managers moving towards AIFs. A lot of the AIF guys, the bigger guys, have actually started launching mutual funds. So you'll realize that things are moving. Yes, I do feel that PMSs are restricted, but I think this regulator may have a good reason. But one good thing I've seen that PMS has done is that they've incubated a lot of fund managers. This is an industry which I think last 5 to 7 years, a lot of people like us professionals have come in. A lot of them out there who have come in, who've joined in. Because honestly, the entry barrier is not very high, just a couple of crores, which most people can sort of, pool in. So I find that it's become a very interesting area. So from these guys, the good guys are, going into AIFs. Someday they'll start mutual funds. Someday this whole new category comes. So I find it's a good incubating area. But as people evolve, I think people will translate into other asset classes, which is going to be, I think AIFs is going to be one natural progression place. And beyond AIFs, then it's mutual funds. So I guess there is a graduation process.
Yeah, fair. Well, it's just Atul mentioned about the SIFs. We know that the regulations are still awaited in full, but broad construct one is aware of the 10 lakh piece within the mutual fund. Now, what's going to happen according to you? There is a 10 lakhs variety, there is a 50 lakh variety, there is a 1 crore variety, and there is retail mutual funds. Is the SIF are going to sabotage any of these? Like Atul mentioned, one other question, the cake is going to increase. What's going to happen on the SIF account to as you crystal ball? What?
So, no, as you point out, Sachin, a lot of the regulation clarity is still awaited. We also don't know what it means in final form. But look, the mutual fund structure is an extremely attractive structure from a tax perspective. Absolutely. Right? Now, if it's going to do, if it, as this special investment vehicle, if it gives you the same flexibility as a PMS or an AIF with far lower tax friction, suddenly the mutual fund structure will become far more attractive. Right? So actually, I don't know if that's a good thing or bad thing because, as Atul says,
bad for a PMS manager.
Because you entrepreneurs, the smaller guys who have only 5 crores or 10 crores, right, to start their firm, they will be inhibited from starting their firm, right, or even the AIF models. So I think that tax clarity is one of the most important aspects that needs to be clarified by SEBI. Because is it going to make the PMS stroke AIF formats redundant? And that is really what we are awaiting from SEBI.
Correct.
Yeah, the most sophisticated investor very often looks at returns post-tax.
Yeah.
And I mean, most of the returns that we show out are always pre-tax. But when you take post-tax, you'll realize that as Rajesh said, the mutual fund structure is the best. It's the least hassle and the most efficient.
Yeah, what happens is, let me just kind of elaborate there. So if I'm in a mutual fund, I don't have to pay tax regardless of how many times I turn my portfolio. Right? As an investor outside, I'm not paying tax until I remove my money from the mutual fund, which means my money keeps compounding. Right? Pre-tax, it keeps compounding pre-tax until I actually remove the money. In the PMS or an AIF format, you have to pay tax annually, which means that's as a deduction to my NAV on an annual basis. And only that, the net of tax compounds for the next year.
Right.
So that is, I think, the disadvantage that you would create in case you give the same flexibility in an SIV that you're giving for a PMS and an AIF, but to the mutual fund.
Understood. Fair point. We are just around the corner for the budgets, and I need to ask you that what is there any expectation the industry has from the budgets? Maybe Rajesh, you can, since you represent the mutual funds, is there any generally for the economy and especially for capital markets, anything expected of this budget?
We are going through a slowdown. Two things the government needs to address: consumption and investment. So consumption has certainly slowed down, right? We can see that the urban spending is kind of quite slow, and investment slowdown has also happened. Government has not spent as much. In fact, even now, I don't think the numbers are telling us that the investment spend that was supposed to happen from the government is happening at the same pace. So if the budget should address this slowdown that is happening in the economy, and in two aspects: one is consumption, and the second is investment. So that's what we are looking forward to.
Right. Thanks, Nat. Thanks. Good answer, Rajesh. Atul, anything from your side?
No, I think that there was always a wish list, but now I've stopped having wish lists for budgets. Now I have a reaction list because now over the years I've found that even the importance, a lot of good policy decisions happen outside budget. Like let's say corporate tax rates which are cut happen outside budget. So I find that a lot of good things happen outside budget. So the importance of big policy announcements is reduced, and that is also visible in market volatility. I remember earlier on budget days, the markets used to swing wild. Now you have pretty placid days. So I feel that the importance of the budget as the only time when massive policy changes were done has reduced. So I guess that importance is kind of less. But apart from policy, I feel that one of the issues that we are really facing is the government spending. That they have the allocations. They had the allocations. They have underspent. And what I feel is going to be more important is that by 31st March, when this fiscal year ends, as to how much they really push on that. I mean, they have the money, but they are not spending. And that is going to be very, very important because, all this whole corporate earnings that have been slowing down, etc. We know that the big pusher of all these orders, etc. is still the government. Private capex has not taken off. The important thing is that we have this window. And for me, that is going to be important. And the government pushes out that, gives those orders, steps on it, which all got reduced so-called due to elections. But I think that is going to be very, very important. So I would look out for that. Because if that happens, then my thesis, which I'm expecting will happen, that by the second half of this calendar year, you will see a takeoff.
So essentially looking for some kickstart will happen through budget.
Absolutely.
As we are coming towards the close of this conversation, let me give you I'll not say a fun question, but I know your views on the Goldilocks moment. I've seen your interviews on the Goldilocks moments at the world level. Now, let's take you to the time machine and take you to 2047, the Amrut Kal of ours. All of us are looking forward to it. What are you looking in 2047? What is the Nifty looking at? What is the Indian economy is looking at? How does the India is looking at 2047?
I think that, Amrit Kal is a beautiful term which has been coined. But essentially, this is a phase of great economic accelerated growth. And you'll realize that all countries, all major economies, when they've had these renaissance movements, it's been very similar. So we try to figure out, that what are these things that really make these accelerated growth rates? When these countries really evolve, it's like a breakout in a country's economy. So we find that there are basically 3 or 4 important areas. The first is demographics. A young population is the biggest strength. And the interesting part is that for you to get those demographics takes 100 years. You cannot do anything today to change your demographics. Look what's happening to Europe. For them to change demographics will take them 100 years. So what happens whenever it's US, we spoke about 1980 to 2000, that was the phase of baby boomers in the US. Or for Japan, it was post-World War. Or for China also had this baby boom. So when you have a very young population, a young working population, that is the biggest strength. And that, as I said, takes 100 years to happen. So fortunately, India is one of the youngest population. I think we have six. Yeah, so I think 63% of the population is in that age group, which is in that workspace. So we are the country with the best demographics of the world. So that is one very important thing. Good demographics is number one, but you also need good politics. Because if you have a young population and you don't give them employment, that could lead to social upheaval. Because when young people don't get jobs, then they will look for alternative ways, which could be destructive. I also think the politics of this country is today very focused on growth. I spoke about the podcast where the vision is about having a Viksit Bharat. Whether it happens or doesn't happen, it's a different story. But the focus of the government is towards growth. The government is very clear about it. And third, which I think is very, very important, is from our stock market, because you asked about Nifty targets, is the domestic flows. Like in US, if you look at 1980 to 2000, it was a 401k. So the 401k in 1978 could not invest in equity as asset class. In 1978, 401k money could come into equity, and that flows actually led to a very, very smooth and beautiful bull market for 20 years. So even in India, our 401k movement is SIPs. So you really notice, and you look at the numbers. Now, last 3-4 months, the markets have been bad, but the SIP numbers are not slowed. They will slow down or whatever. But that shift that has happened, whether it's due to digitization, due to its financialization, due to it is whatever that has happened, whatever that mix is. But for India, our 401k movement is SIPs. And the good part is that this SIP flows have actually just started in this journey. So I feel that we have the perfect cocktail. And I feel that 2047, the market is going to surprise people on the upside. Because not only are we going to have growth as an economy, but we will also have to accept that there is going to be a PE expansion. Because all these economies in these phases had not only economic growth, but the markets went through PE expansion. And that is why you had these secular bull run. It's not just US, even China had that. Even Japan had that. So I guess India is in the same mode. Economically, we are getting into that category, that group. And for us, Amritkal, why not?
I should meet you more often. I'm feeling very positive. Rajesh, this is for our young investors watching this podcast. What advice you will give to, let's say, a young Rajesh Bhatia of 20 years old, 25 years old, which from the learnings from your triumphs that you did on your investing journey or some mistakes that you did on your journey, what kind of lessons you will share with your young investors?
So two things that come to mind is one, I think, don't underestimate the power of stock picking. There are so many businesses that are kind of growing in India. If you find one business which has a long duration of growth, right, and you just sit on it, that is enough for you to change your wealth dimension, right? Yeah. I think be a very, very good stock picker and be attentive to the long duration of growth of a business. The second, I would say, this business is really about reflecting. Some people call it meditating, but you need to give yourself 1 hour every day to think, to reflect, and that's where the clarity of thought comes. That's where, with clarity of thought comes conviction. With conviction, you're able to put in large sums of money to work, and for that you require to take time to reflect. So spend some time reflecting on an everyday basis and assimilate your thoughts, and that's where your income will come.
Okay, great. So let's come to the last question of today in this chat, and we can't do without talking about you both run the businesses, and something that is breaking the internet with various things, about 70-hour or 90-hour kind of a work week. So where are you on this? I think industries seem to be divided.
No, I think, this probably the question assumes that, when you're working, you're mentally struggling. Now, it's actually not like that. It's probably in our business even more so because it's so creative, right? So, actually we are working almost 24 by 7. Even in the night, I'm actually checking out what's happening with the Dow and, what kind of news flow is coming in. And it's not as if, we are forced to do it. We just enjoy doing it. So, for us, it's a mental, nirvana to kind of to solve this jigsaw puzzle, to find the next opportunity. So, of course, you need rest time. Require rest time of your brain, etc. You need to kind of make sure that you're physically fit, etc. But my sense is that it's really up to the person, and if you are pursuing investing, I can promise you that the number of hours are not going to bother you.
Atul?
So I'm in the 90 hours per month category. No, I mean, markets are so engrossing. They just take up every hour. They just take up. Not at work. It's not, I mean, you're always thinking about markets. It's such a passion. So I don't think it's like for me work. It's just an extension of a passion. And we are very blessed actually. We are in one of the best professions in this country. I'll tell you why. Our life starts at 9:15. At 9 o'clock also you can't change anything. And it shuts at 3:30. At 3:31 you can't do anything. Right? You can amuse yourself by looking at US, Europe, etc. So first of all is that Saturday, Sunday markets are shut. It is we sit in air conditioned offices. This is the only profession in India where you don't have to ask anybody for payments. Thanks to people like you. Right? You don't have to lie to anybody. You don't have to missell to anybody. Nothing. So I think we are really blessed that we are in a very, very beautiful profession. No other profession in this country has such amount of transparency. We don't have to deal with much government red tapeism. We don't have to have this black, white, number 1, 2 compulsions. So I think we are very, very blessed in that sense of term. That's why what happens is in this profession, we are very absorbed. We are very absorbed. And the interesting part is we are absorbed on a very creative level. In fact, I personally think that religion and stock market investing at some place will cross each other. It's almost a spiritual experience. So that's why for me, 30 hours or 60 hours or 90 hours a week, a month really don't matter. It's just a passion, total passion.
Yeah, well said. I get from both of you guys is love your job and then number of hours is generally nothing, means nothing. So that's
we have freedom. The interesting part is that there is freedom. Because the beauty is that when you have freedom, that is the ultimate kicker. Really.
Right. So this comes to the end of the today's chat. I think I enjoyed it thoroughly. Thank you so much.
Thank you.
Really
Thanks
had a
for
wonderful
having
time. Thank you so much.
Thanks.
Friends, this comes to the end of the Kotak conversation. I hope you enjoyed it as much as I did. Thank you for tuning in and wait for the next one. Thank you so much.